Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Sunday Roast. It's the 13th of November and it's surprisingly warm for November, 18 degrees and sunny in London. And this week we've seen a recession looming as the UK economy starts to shrink. England heartbreak as New Zealand win the World Cup. And the Senate race currently neck and neck with the anticipated Republican red wave that never happened. Where do you want to start, Kev?
Well, Klopp got a one match ban from the sidelines, which is the most important thing that happened this week, because basically the FA are against him, I think. But where do I want to start? You know what I want to start with? I want to start with the dollar's decline. It's actually starting to happen after the number of times I've said it. It's bizarre. So the dollar peaked at 115 as a basket of values against other currencies. And on Friday, it finished at 106.5, I think it was. So we've had an 8% plus, maybe 8.5% plus decline in the dollar now in the last 10 days. So it's starting to happen. I think reality is starting to hit home. What's happened in America is almost like cliffhanger time, isn't it? We don't really know what's happened yet. Looks like the Republicans are going to get control of one of the houses, which is going to basically put a stop on Biden. Looks like the US is basically slowing down in inflation, so that should mean that interest rates are either less aggressively increased or start to peak, as we discussed, I think, last week. We had a run on gold. We had a run on copper.
Yeah, so the GBP USD was hit 1.17, which is, I think, is an 11-week high. And all eyes are on the 1.18. So I think, as you say, there's the inflation in the US seems to have been stymied by these recent interest rate rises, and it does look like inflation is kind of like there was a light inflation report basically. S&P 500 jumped 5% in the biggest rally in 2 years, which is obviously investors pinning their hopes on the worst of the inflation being over. Markets also got a boost after China elects some of its strict anti-COVID measures. Obviously, they've been hurting the world's second largest economy. And then obviously hopes for more growth from China helped not only the stocks, but oil prices rose as well, with US crude gaining 2.9% to about $89 a barrel. So what are your thoughts on that? Do you think that there is some also obviously affecting the copper prices as China, relaxes its COVID measures?
Yeah, I mean, they've been playing the game with copper now, I think, for over a year. So, copper hits over $5 a pound, which I think was, I don't remember the exact amount in per ton. Is it 10, 11,000 per ton or something like that? And then it's gone all the way down to low threes, I think. And now hit $4 there, I think, on Friday, £4, which I think is getting close to $9,000 per ton. Yeah. So I think there's just not enough copper, isn't there? I mean, that's just a reality. It's not anybody trying to kid anybody else. There's not enough copper. So should it be impacting stocks? Should it be impacting, the ones we've talked about, Galileo for sure, African Pioneer, Extract Resources? Colin Bird's been talking about this for a long time, as we know, and it's coming. It's coming. And as China opens up more and the world realizes that to get out of recessions, it's going to have lots of spending on major projects, all of which need metals in general, copper being one of them.
Green transition.
And then we've got the green transition on top of that. So in other words, you got batteries in the cars and all the rest of the stuff that needs. An EV car needs a lot more copper than a normal car or a petrol car. So, I think the story is going to be continuing. I fully expect the US dollar to continue to come down. I think this is the first leg. Maybe it's going to continue to rock down and then come back and then rock down again. But I think it's going down. It has to almost.
Yeah, they're saying that copper reserves are set to fall to around 3 days worth of worldwide consumption by the end of the year. So that just shows you how much of a deficit they're in. 3 days worth of worldwide consumption reserve. I mean, it's alarming, really. And that's what you say, it'll just continue to rise. I think it'll go back towards the 10,000 mark for sure. So obviously gold
and
prices,
you've seen the same with gold as well, haven't you?
Yeah, gold prices went up 4.8% to trade at 1762. That's the biggest single week advance since July 2020.
Yeah, from low 1600s, wasn't it, all the way up to 1760.
Yeah.
And a lot of the banks at the start of the year were predicting gold to be 2,000 to 2,500 by the end of this year. Who knows? Who knows? I know we've only got a number of weeks left, but if it keeps going and people see this now as a decent inflation hedge, because you think about it, is the US dollar going to be a decent inflation hedge if it's devaluing, as in if it's starting to come off its top? No. So then there's a rush for the next commodity or the next thing that could protect our capital, which is gold, in my view, in the short term. So, And at the same time, we've got all these issues with the cryptocurrency. I mean, what was the name of that company that basically went into administration this week? It lost 100%. What was it? FX something?
Yeah, FX. That guy, the guy who ran it, lost something like 16 billion, didn't he? His investment went from 16 billion to 1 billion in less than 2 hours or something ridiculous.
Yeah, but that was before the administration, because now he's lost everything.
Yeah.
So let's hope he cashed in something along the way. Otherwise, he's going to be destitute. But yeah. I mean, I see things are starting to change as we'd sort of talked about before. It's going to be interesting. I think we'd like to do something on copper and gold, so we'll have to try and get some of the CEOs together and just talk about that again, because I really think 2023 is going to be the year of the commodity. To be honest, I really do. We've got such large spending coming from governments in big projects. That have to happen as part of helping economies out of recession. And we've also still got the whole EV thing. So all commodities.
There was an interesting, because I saw that met coal, high vol A, had increased by a few, probably about 5 to 7% in the last 14 days. It's been moving very steadily. But there was an interesting, Warrior Met Coal released their third quarter results just this week. And their CEO commented that they were able to deliver an extremely strong quarter, both in terms of financial results and better than expected production, despite experiencing continued shipment delays as a result of rail transportation and port maintenance and congestion issues. So that's interesting that despite those challenges, they've delivered quite strong, third quarter results. I mean, it just shows you that all companies are experiencing issues in terms of, transportation, long lead items, that sort of thing. Any comments on that?
Yeah, I mean, we've obviously got Ben's Creek in the stable as well in terms of what's happened there. That was a bit of not a good RNS that they had during the week, didn't they, in terms of basically MBU Capital, the major shareholder, has taken what did they call it? A lien or
a charge over the shares.
A charge over their shares, which didn't obviously put Ben's Creek in an uncertain situation. But then another RNS that the following day basically clarified the thing, which I think basically it just shows that MBU Capital have pretty much tied up their shares for another 12 months by the looks of things, 12 to 24 months, because they basically made the shares the security of the loan. So, and the loan is with Blue Star Capital, and Blue Star Capital also have a 4% holding in Ben's Creek. They invested quite a lot of money in the last raise, I think, to buy all the equipment and stuff. So I think both parties now have an advantage, or they're going to see an advantage if Ben's Creek succeeds. So in a way, it was a bit like, oh, what's this all about? On Tuesday, I think it was. And then on Wednesday, it's right. Okay.
It was a bit out of the blue, wasn't it? As a bit part of the pun. But I think the key takeaway is it's not highly leveraged, isn't it? That's one of the key takeaways from it. And it's now entered into a longer term routine financing agreement on that. So yeah, and as you say that they're heavily invested. You've got JCAM, you've got MBU and Blue Star. That they're not in this for the pence. They're in this for the bigger figures, right?
Yeah, and you go back to Warrior Met Coal, who've all sorts of other problems. Like, in all honesty, they've got a market valuation of $1.76 billion. So we're talking about in pounds, let's be conservative and say £1.5 billion.
So they did in their last quarter, I was reading the production figures, they did 1.5 million short tons in the last quarter. So I don't know what we can deduce from that in terms of, I'm not saying we'll do a comparison, but do you know what I mean? That just gives you an idea of the difference. I
think that means that they're probably around, fivefold in production, going to be bigger than Ben's Creek, right? So maybe fivefold. So that would mean $300 million minimum if you have the same labor issues and the same debts involved, which Ben don't have.
Yeah.
So, to say Ben's Creek's now worth £90 million, I think is basically the value of the assets, and maybe not even the value of the assets. Maybe the assets are more. And even though it was a bit of a shock this week, I think that the reality of the outcome of it seems to be that MBU and Blue Capital have to work this all through. They have to basically be positive about Ben's Creek, because that's how they're going to succeed, if you like, because
let's not
major shareholders.
Let's not pull any punches. If it wasn't for MBU, this whole project wouldn't have been funded and wouldn't be in existence right now.
Yeah, absolutely. And it seems obviously they've used Blue Star Capital to help that happen. So it's like intertwined now. There's no getting out of it. But the reality of it is, it looks like 60% of the share capital is now basically tied up. And then you've got Adam's holding as well. Adam has got, I think, and then you've got
people right in saying it's Adam talking to Adam. And actually, if you look at the updates, Adam was originally part of MBU and effectively brought that deal in, but he's no longer associated with MBU. So that's all nonsense, right? If you look at the reality of the situation.
Yeah, but sure, people like writing nonsense, don't they? Let's be honest.
Yeah.
Not nonsense gets people to clickbait and go through on things. So let's have the nonsense. I mean, is Ben's Creek in a better position now than it was 12 months ago? Answer. What do you think?
Oh, for sure. I mean, we've seen the site and we've seen how much to take a mothballed, wash plant and site and turn it into an actual producing mine where they've had something like 9 or 10 trains leave. That's phenomenal to have achieved that.
Yeah,
and with the challenges of flooding on the trains, where they've had to make reparations. So ultimately, it's in a great, and we're looking forward. Well, I'm certainly looking forward. I don't know about you, but I'm getting out there in May to actually go and follow up and see it a year on.
Yeah, should be good to see what's been happening. I mean, it was pretty impressive when we went last time, to be honest. I mean, they were producing coal. The coal was being chucked out from the high wall miner. They're
going to make changes to the belt system and things like that, and the feed and tweak the wash plant, and as we heard in the last RNS. So it'll be interesting to see how things have moved on in by those kind of modifications to the plant.
I think Adam said it a few times on the various podcasts we've had, that now Ben's Creek becomes basically an option on the price of metallurgical coal. We've seen metallurgical coal start to tick up now. It's hit $300 for the high vol A. It's $290 something for the high vol B. Every dollar that inches up is going to make this situation more and more and more profitable. And their own equipment now on site is going to mean that the sort of profit per ton is going to increase even more. Second high wall miner has got to be ordered shortly. And we have actually spoken to Adam this weekend. We had a good chat with him, but he's been hectic because he was at the World Met Conference there in Chicago, I think it was. Chicago, Illinois. And so we had a chat with him. And so lots going on, lots to be done. But I think, we're going to see a lot more productivity coming forward. And if that is timed well now with the fact that the met coal price is starting to gather pace, if you like. I mean, it could even gather pace because of there is issues with transportation and all those other things, which hopefully are going to be rectified. So there's still a few risks in there for sure, but I don't think any of them are priced in. All of them are priced in. and more.
I mean, the one thing we didn't mention, that there was obviously the update on Monday where they talked about the first high wall miner going into a second shift and doubling the daily production there. They've obviously looking at the new seam where they've moved the miner to, and I think they're saying that it's a 50-inch seam as opposed to a 32-inch. So the seam that they're going to be mining into is a bigger, it's a bigger seam. So they're going to be obviously be able to get more production out there, right?
Yeah, I mean, based on those figures on that RNS, I mean, I ran the figures. Obviously, this is a one shot rather than a month's production. But I mean, basically, it was nearly doubling the amount of production because of the size of the seam. So obviously, time will tell on that how productive it is. Both because the wash plant was able to take 62% clean coal from the run a day coal. And also
62% recovery rate, basically, wasn't it?
Yeah. And also the seam was 50 inches instead of 38, I think it was. So obviously this makes a huge difference, I think, in terms of how much productivity comes out. So yeah, we'll have to suck that and see and wait. But I see there's some serious positivity because obviously the copper price has gone up. We haven't seen it translate to the share prices at all. And also the gold price, so I'm definitely looking at, some gold stocks. You got to be looking at Greatland Gold's got to be a good play if gold starts to accelerate in price. You got East Star Resources as well, another good play. What else is in the gold sector there that you could think of?
Well, you got Mila Resources as well, haven't you? And you've got
Mila, they're drilling as well. The price of copper has just gone basically from $3.20 to $4 in a week. So that's over 20, or just over a week. So that's over 20% increase in the price of copper. So does that mean all those situations that people are in, that suddenly they're worth significantly more? You've got the situation with African Pioneer and the different things that they've got in Zambia. We haven't mentioned it yet. We're looking at visiting some of the copper assets in Africa early next year. So that should be interesting, and we'll report back from that. We've had discussions with a few of the companies that we're going to visit. Yeah, and what else happened last week then?
So we obviously got news about Made.com. Unfortunately, we mentioned this last week where they were suspended. Obviously, they did look for a suitor, and unfortunately, they couldn't find somebody to actually buy the business. So they ended up, they've gone into liquidation. They've called in the administrators, and they're actually selling the name Made.com to Next Retail. So, the Next clothing store have taken that on, which is probably a good deal for Next, right? £4 million or something like that, roughly, for that name. I think they've got a good deal there. So it's a shame for investors, obviously, and people who were still in it when it was. I don't know whether they're going to potentially share any of those profits between the remaining shareholders that would still be holding at the time of suspension. So watch this space on that one. The other one that caught my eye was Specs, InSpecs Group, who are they make the frames for sunglasses frames and frames for glasses for some of the big names out there. They're a Bath-based company, and that they basically were beaten down from about £4 a share to the low 40s. What we saw in the last week or so was a lot of director buying, the CEO buying up to £400,000 worth of stock in his pension. And he also bought I believe his wife, his spouse, also bought stock in the company. And they kind of made a recovery play from mid 40s up to into the 70s, into the mid 70s. So for me, that's one to look out for at the moment. They had some issues with let's say unfavorable foreign exchange rates in Europe, which obviously beat down some of the potential. And then they also put some of the plans for expanding their Vietnam and their Portugal factories on hold until sort of Q2, Q3 of 2023. So what do you think? What do you make of it, Spec?
Well, I think one of their major brands is Ray-Ban, no? So, I mean, I think you're buying a household name here that's not going to lose the potential to be sold. I think the world is going to wear Ray-Bans for a good while yet. So my feeling is that the director's gone all in pretty much, hasn't he? He's pretty much invested everything he could at, I think, 48p. But a lot of the directors also bought, I think, at over £2. I think as it was falling, because they didn't expect it to go this far. So yeah, I think it's definitely got a good chance. Yeah. The other one that occurred to me while you were talking there, Phil, was Jubilee. Okay. And Jubilee Metals mainly because of their massive expansion in Zambia in the copper, because effectively they've just had an increase of 20% to their bottom line because of the copper price. If that happens, then they should be valued significantly higher than they are now, and they probably should be valued higher than they are now anyway, just based on what they've now finished with their palladium, and then obviously the expansion into the copper, which is going to exponentially grow over the next number of years, and all from waste product as well, all from like stuff that's just lying there, and they're actually cleaning the place up by doing this. So yeah, I think that could be a great play based on the copper situation.
Mm-hmm. It was a good week for the oil and gas. As we've already mentioned, that oil had a good week, rising sort of 4.45%. Predator Oil and Gas had some news out about the MOU to Well, and they had they moved up sort of from the 7p to the around about the 9 pence range. So that was a good week for them. They're up about 25% on the week. And then the other one was Prospects Oil and Gas as well. And we've had both companies on. We've had Mark on and Paul. They look good. What do you think of those? And obviously the Prospects one, as they kind of bring on the Italian assets and Spain, I think that could be a really one to watch for 2023 as they aim towards first gas.
Yeah, I think both of them have got big potential of upside. They're probably both going to be producing and bringing in significant revenue during 2023. And yeah, I can't see much downside in either of them, to be honest. And obviously that's why the share prices have been quite buoyant. There was also some news on ADM Energy, wasn't there? About there was a couple of TR1s, basically Align Research.
Well, the interesting one was Osa. Is we've interviewed Osa before. He stepped down, didn't he, as CEO there? So obviously that was quite big news. I don't think we talked about that one that week. I think he left the last day or the last working day of October. Yes. So that's interesting. I think there was a lot of, certainly on Twitter, there was a bit of a furore over that, and there was quite a lot of people who were sort of celebrating it, which seemed a little bit callous. But I guess that's some people do that sort of thing. But what are your thoughts on that? Do you think that and obviously, as you mentioned, the line did have an RNS came out on a TR1 holdings, but from my understanding of that was that they were diluted down because of the issuance of equity. So that wasn't really them reducing. That was actually an RNS.
They weren't reducing, and I think Align actually did comment on that the day after, saying, if anything, we're probably going to be net buyers from this stage, because they were huge shareholding in that company until recently. And then they sold down, and that's one of the reasons why the share price is basically now only worth £2.2 million. Effectively, for the assets that they've got, when we spoke to Osa, effectively the share price should be in the range, even after the dilution, of somewhere in the region of 3 to 4 pence, based on the price that the same asset that they own was sold at just recently. So, even 3 to 4 pence is four bags from here. It's four bags from here. That's without anything else. I think once we get another CEO in there, then I think we're going to see something happening. And, I think it's definitely an opportunity. The
RJ field itself is massive, isn't it? As part of the offshore Nigeria, I see when you look at it in terms of its size.
Yeah, if we don't necessarily want them to do it, but if they sold the RJ field or the part of the RJ field that they have themselves without developing it, then that's currently worth, I think, $10 to $12 million, isn't it? So,
yeah, I think they own about 9.2% of that particular one, don't they? The RJ field. So
yeah, so the value of the company being at 2.2 million doesn't make any sense.
Well, I make it 1.8. I make it 1.8 million on SharePad. It's 0.7p, which is a sub 2 million cap, which is crazy.
Yeah, maybe.
So the other one that I looked at, I mentioned it, I think last week, was Grit. Another one that just, it did move on Friday from the 3.5 to the 4p range. And I do think it at 250, 300,000 cap for a main market listed shell or SPAC is absolutely ridiculously cheap. So I'm going to keep an eye on that one in the next, next couple of weeks. That's my one to watch for the, in the next couple of weeks. Keep an eye on it.
Yeah. I mean, if I'm going to say what's going to happen between now and, say, the end of the year, I see that Chill's looking like it could do quite well. There's all sorts of situations coming about that they're probably going to be launching a vape shortly. Callum commented on that this week.
Yeah, I saw the pictures on Twitter. He showed the pictures.
What flavors do you fancy in the vapes? And there's huge margin on those. And if we get those out and into the Chill line, then I think you could really see some great revenue coming from that, which would really give it a kickstart. I think, I see progress anyway, let's put it that way. And it's obviously pretty lowly valued as it is, but I can see progress. They have cash, and, here's hoping that it starts to recover. I spoke with Callum this week briefly. He's been out in Colorado this week, just gone. He was saying he was doing a deep dive into everything in the company again to just see what they could improve and get better at. And and they've obviously launched the online stuff, and it seems to be going quite well. So he was keen that would be continually pushed and improved. So yeah.
I mean, the other movers this week, to just give a quick mention to Aston Martin Lagonda Global, obviously the manufacturer of luxury and premium brand sports cars, had a good RNS. I think their revenues were in line with let's say estimates. Music Magpie also had a good week. They're up about over 60% on the 5 days. Harland and Wolff also had a good week, about 44% up. And the other one was Vela Technologies, the investment company. They were up 38%. So I think that kind of wraps up. But in terms of looking forward,
the interesting one last week was actually what we did on the Sunday roast last week, which was Kibu. And Kibu had some serious action this week because there was an RNS came out for TR1. Someone had sold down, how many million was it? 140 million shares?
Yeah, 140, 150 million shares.
So 150 million, 140 million shares went, and the share price didn't go down. It stayed where it was. So for me, this was incredibly encouraging. I really do think that at £5.5 million, Kibu, with its assets, that it holds massed already, which basically represents that 5.5 million. And the other assets, it's got the asset in Southport, which I think I'm hopefully going to go and visit 25th of November, I think it is, when I'm over. Yeah, so again, I think that one is ripe to go. I think, obviously there's been a big seller, sold 4.5% of the company.
Yeah, I mean, it's the fact that they managed to absorb that many shares around 0.17p is quite telling, really, that somebody wants stock, because there was a large number I saw on one day alone. There was, some of them were 15 million, 7 million, 5.8, just clip selling all these large numbers of round, there's a seller there trying to get out, a distressed seller for whatever reason. But as you say, at 0.17 to 0.9, around 0.2, it's an absolute bargain. So I expect to see, now the seller's out, I expect to see some sort of upward movement in that one for sure. It's a bargain. So we're looking forward to next week. I'm looking forward to, obviously, Rishi's autumn statement with Jeremy Hunt. It was originally planned to cut taxes on business investments, but obviously we're going to see increases in taxes now going forward, which will obviously penalise the small businesses or the SMEs with planned increases in corporation tax, and obviously they're talking about potentially increasing income tax as well. So, what are your thoughts on that? What do you think we'll see from the Chancellor?
Well, I think he will increase taxes, and if that actually settles the international view of the UK economy, then I think that will benefit us all. If you think about it, the dollar's now 117. Actually, I think 118 even today as we record this. So that is a 10% swing from the 105s, 107 that we had when all of this sort of instability was here. So that in itself has actually been a benefit to us. So if actually the pound gets stronger because they start to do this, this is going to mean your pound is possibly worth more. So, I think it's a good thing, to be honest.
I think they've got a lot of work to do, though, between now and Thursday to actually make sure, because they've got one shot at this. They've delayed it already once. They have got to get this one right. Liz Truss absolutely crashed the economy, has put us into the worst position that we've been in for many, many years. And now, we're now in a situation where Jeremy and Rishi need to make sure that they get this one absolutely bang on, in terms of getting the money back and getting us out of this big deficit that we're in, that we've been in since, unfortunately, way before the actual pandemic. This isn't new, is it? This is debt that's been accumulating for many, many years, made poor decisions that previous prime ministers and chancellors have made.
Yeah, no, but every Western government's running a deficit pretty much. So it seems to be the economic way of today, doesn't it? The only ones that aren't running deficits is China, Russia.
Have you seen the worst deficit, the GDP debt ratio? I think Japan are about 250, but it's absolutely shocking their debt levels. Anyway, on that note, let's we'll wrap things up. I think we've rambled on enough for this week.
Quite long enough.
So I wish you a good weekend or what's left of it, and we'll catch up next week. Yeah,
enjoy the rest of the weekend, and good luck, everybody, as the market hopefully is starting to move in the right direction. We will see.
Yeah.
So let's see what happens. Goodbye.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.